Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lavisha Darad. Well, it has been a good day for the markets as both the headline indices have extended their gains to the second consecutive session. But yes, with this, Sensex has advanced by about 500 points in the past two sessions, and Nifty is also back above that 26,100 odd levels. But yes, sir, now after last week's volatility, the broad-based buying seen across sectors today showcases that there is a renewed appetite for risk which is prevalent in the markets. But yes, India Wix too, which has touched the record low today, reaffirms that the belief that the traders are not pricing in any immediate panic for the time being. But yes, on the levels front, where we stand as of now, Sensex up by about 600 points, Nifty above that 26,150 mark, so to say. If you look at the breadth of the markets, that fairly remains in favor of the advances, so to say. But yes, since it's a holiday truncated week, so some thin volumes could be expected to be there in the markets today. But yes, there were four key factors that helped to revive the sentiment today. First, the rupee's good rebound, where it has risen by about 22 paise against the US dollar following the firm intervention by the RBI. Second, FIIs have turned buyers from the last three sessions. We'll watch out today's numbers, what it looks like. But yes, FII buying, has restored a certain faith in the markets as well. Third factor coming to is that the global markets have remained quite buoyant. We did see that the US markets on Friday clocked good gains. Asia Pacific markets today also largely rose, and even European markets today in the afternoon were quite steady. And lastly, technically we are well positioned because Nifty has seen about 3 weeks of consecutive declines. So we can say that Nifty has been under the oversold territory. But yes, currently on the top gainers and losers front, where we stand on the Nifty 50, if you look at the top gainer, that is your Shriram Finance, showcasing a gain of about 3.8, nearly a 4% gains after Japanese MUFG Bank's 39,600 crore rupees investment for about 20% stake, and that is why you can see Shriram Finance doing quite well. Brokerages have also remained quite bullish on the counter. They believe that the investment could also increase the ROE going ahead, and of course, the long-term trajectory looks quite positive because they believe that there will be stronger balance sheet going ahead as well. On the other hand, if you look at some of the other gainers, IT stocks did once again well today on the back of Fed's rate cut bets that has increased, as a result of which we can see Infosys doing well with about 3% gains, Wipro with about 3% gains as well, Trent also doing well, up for the second consecutive day with about 3% gains, Bharti Airtel also one of the top Nifty gainers. We've seen that the counter has been sustaining gains after the announcement of its 16,000 crore rupees of rights issue, and that's why today also we can see the telecom operator showcasing good gains. On the other hand, on the flip side, if you look at the top losers, you can see SBI showcasing a decline of about 6%. Life insurance stocks have not been doing well. So as a result, you can see SBI Life, HDFC Life, both of them seeing a decline of nearly 0.5%. Kotak Mahindra Bank seeing a decline of about 0.4%. Tata Consumer Products, on the other hand, also one of the top Nifty losers as of now. But yes, sir, to understand the last minutes of the trade and how you should be positioned, I'll quickly go across to my technical expert of the show. Joining me is Rajesh Bhosle, Senior Technical and Derivative Analyst at Angel One. Rajesh, good afternoon. I mean, it's the second consecutive day gains for Nifty. Can we say finally that the markets have been experiencing the Santa Claus rally?
Hello, afternoon, and thank you for having me on your show. So yes, I mean, if we see since mid-November, markets were in a correction mode. If we see the early charts, Nifty was trading in a falling channel pattern. But on Friday, we saw a bullish breakout from this pattern, and follow-up buying is seen today. With this, on the early chart, Nifty has started moving in a higher top, higher bottom structure. So uptrend has resumed, and we expect in this truncated week, Nifty may retest its all-time high levels of around 26,300 and can move beyond that. So our bias remains positive, and we would suggest that if in case there is any dip, it should be taken as a buying opportunity. On the lower side, if we see there is a bullish gap left today, so any dip toward 26,000 would be now treated as a buying opportunity.
All right, it can retest the record high levels. That's what you're saying about Nifty 50. But yes, Rajesh, what about the broad end of the markets? They're seeing a bit of recovery. Both the mid-cap and small-cap indices are up for the third day. What lies next?
So last week we saw that Nifty retested its recent lows of 25,700, that was around it 50 EMA. On the same time, mid cap and small cap also tested its initial lows, and from there we are seeing a double bottom breakout. So this is a bullish kind of formation, and we expect broader markets to do well. In fact, as you highlighted Santa Rally, this is a time when a mid cap and small cap generally perform well. So our view would be to focus on broader markets. They were been under pressure since last couple of months, but as we head for the end of the year, we expect some participation or performance from this end as well.
Okay, all right. In today's market, we've seen that IT stocks have once again been quite cheery. Nifty IT index has hit about this 5-month high. What do you expect? Do you expect the trend to continue? Because since October, the IT index has rallied about 17%.
Yeah, in last couple of months, definitely IT has done well. And if we see charts, IT index is still far from its all-time highs. In fact, it has just crossed its June and July swing highs. So we are seeing a reversal kind of pattern formation, and we expect similar to banking space and other heavyweight space, IT index can also move to its all-time high level. So far in last couple of months, it has already moved, but it still have to catch up with the other heavyweights. It's still out of overbought zone. So any dip can be bought into. We expect IT index to move towards the initial levels of 41,000 to 41,500 levels in the near term.
Okay, all right. Anything that you're liking from this space, Rajesh, from the IT basket?
So from this space, we are liking TCS. TCS was struggling around its 200 DMA. Finally, it has crossed its 200 DMA. We expect stock to move towards the levels of 3,500. From the heavyweight TCS, we are liking, and from the small mid cap space, we are liking BSoft. BSoft has given a channel pattern breakout on the daily chart. It was trading in a consolidation of around 400 to 300 for the last couple of months, but now it has given a breakout above the 440 levels, and we expect the stock to move towards 500 in the near term. So Birlasoft and TCS are the two counters which we are liking from the IT space.
Okay, all right. Birlasoft and TCS. All right, let's also discuss about the metal space because that continues to do well. The index itself is up for the 4th consecutive day. What should investors do at this point of time? Should they continue buying in this particular sector, Rajesh?
Yeah, overall chart structure remains positive. In fact, it has shown outperformance or a relative strength as compared to the benchmark index, and we expect this performance to continue. Some of the counters like Vedanta, Hindalco, and National Aluminium are a favorite picks from this space.
Okay, all right. Those are the stocks we need to watch out from the metal basket. But yes, let's talk about one of the top Nifty gainers of today. That is your Shriram Finance. It has also hit a record high after the mega $4 billion deal with Japan's MUFG. And this deal has now become one of the largest ever deal which has been done in the Indian financial services space itself. And brokerages, they've remained quite bullish on the counter. Nomura has given out a buy call, raised the target price. Even Jefferies has also raised the target price on the counter while maintaining its buy call. Now, what the brokerages said that the deal will lift Shriram Finance's Tier 1 capital ratio to about 30%, increase the prospects of a credit rating upgrade and boost the company's competitiveness in the new CVs and MSME segment itself. So almost all the brokerages agree that the large investment makes Shriram Finance stronger and more competitive. While short-term returns could soften due to higher capital, the long-term outlook is expected to remain quite strong. Rajesh, coming to you, it's a record high for Shriram Finance today, 3% gains. What lies next then?
So overall, if we see the chart structure from the September itself, the stock has already seen a sharp move. It was trading somewhere around 560, and it's almost trading around 960 levels. So overall sharp rally in last few months, and we expect the positive momentum to continue. Possibly the stock can head towards the 1100 levels. But having said that, the stock has already moved. So those who are holding can continue to hold. But those who are looking to add, I would suggest to wait for some dip or some consolidation. If the stock dips back toward it levels of around 880, 900, that would be an ideal level for the targets of 1100. So overall, bias remains positive, but for fresh longs, dip should be considered.
Okay, dips can be considered, but 1100 levels, that is the next target for Shriram Finance as of now. But yes, let's move on and talk about another stock in focus. That's your Fortis Healthcare. The stock has been doing well, showcasing gain of about 2.5%, given that the company has signed some agreements to acquire 125-bedded People Tree Hospital in Bengaluru through the 100% acquisition of its subsidiary, that is your TMI Healthcare. The total transaction value is standing at about 430 crore rupees. But yes, today, despite today's gains, Rajesh, the stock has fairly been in a consolidation mode in the past couple of months. What do you expect? Will the sideways trend continue, or can we finally see some recovery?
Yeah, so correctly highlighted. If we see around October, it was trading around 1100, and from there prices are in a correction mode. Fortunately, last week prices took support on its 200 DMA, and from there onwards, some positive momentum is there. In the short term, it has crossed its 20 and 50 EMA. So we expect this positive momentum can expect the prices can move back toward its retracement levels of around 950 and then followed by 1000 level. So as of now, the short term as well as the medium term outlook is positive, can consider a positive approach. On the lower side, 850 seems to be the support, and as I highlighted, 1000 level seems to be the immediate targets.
Okay, all right. 850 as a support and 1000 as the next target for this particular counter. All right, let's move on and talk about another stock in focus. That is your GE Vernova. Well, the stock has seen quite a bit of good volumes today, and it surged about till 12% in today's trading session after the company announced that it has secured a major high voltage direct current project itself. Now, the company has been awarded a contract by AESL Projects. And today also, right now, the stock, however, from its off its day's high, but still with gains of about 6%. Rajesh, how does the stock look like? Good volumes today. Can the gain sustain going ahead?
So as you highlighted from the morning highs, it has come down, and morning highs are very crucial levels because if we see the 3200, it also coincides with October and November swing high. So as of now, we would wait for prices to regain about 3200 and sustain about. Once that is done, we can see a channel breakout dash that can push prices towards 3500 to 3600 level. So as of now, we would have a wait and watch scenario, but those who are having can hold on to it. Today there is a bullish gap left, so 2950 would be a strong support, but for the positive momentum to trigger, 3200 needs to be crossed.
Okay, all right. That's the view for GE Vernova. The stock has seen good gains today, nearly 6% as of now. But yes, another stock that did well today, that was your MCX, nearly 5% gains that came in for this counter. And this came after the SEBI chief's comments over the weekend on commodity derivatives. Basically, the chairman has said that the market regulator is looking at banks and insurers' participation in commodity derivatives as in talks with RBI and IRDA for the same itself. Rajesh, today the stock has done well, and even if we look at from a 6-month time horizon, the stock has done fairly quite well. So what's your take? Can we expect the trend to sustain?
Yes, definitely. The prices are continuously moving in a higher top, higher bottom structure, where every dip is getting bought into. Recently, it dipped towards its 20 EMA, consolidated a bit, and now in today's session, it has crossed its recent swing high. So fresh breakout is there. Possibly the stock can move towards the levels of 11,600. So yes, fresh breakout. And on the downside, if you see the breakout levels around 10,500 would be the immediate support, whereas 11,600 would be the immediate targets.
Okay, all right. That's the view for MCX. Let's move on and talk about another stock in focus. That is your Akums drug, because the stock did see a block deal happening today, and as a result of which we have seen that the stock is exhibiting gains of about 4%. We did see as many as 72 lakh shares, or about 4.6% of the outstanding equity, changed hands in the block deal that took place in the block deal window, and the shares have changed hands at an average price of about 428 rupees per share. Rajesh, the stock has seen traction today, and after remaining subdued, the stock is seeing some recovery. So, What can we watch out next for this particular counter?
So I need to check the symbol. I'm not following this counter. Can you just highlight the symbol?
The symbol is ACOM's Drugs and Pharmaceuticals.
No, I'm not tracking this counter and not able to find it.
Okay, all right, all right. All right, let's shift focus and talk about another stock in focus, that is your Apollo Microsystems. We did see that the stock has hit about 5% upper circuit in today's trading session, and the gains came in after the company announced that it has received approvals from the DRDO for two distinct TOT, that is your transfer of technologies. But yes, Rajesh, good moves today, but still if you look at the stock, trades sub 300 odd rupees. What's your view?
Last week the prices took support on the 200 DMA and also on the golden retracement of the entire rally seen from the July lows to the October high. So the stock has rebounded from its crucial support. So the short term as well as medium term outlook is positive. With a support base of around 220, we expect the stock to rebound to its recent swing high of 285. So short term to medium term outlook is positive. Can have a positive bet on this.
Okay, positive bet on Apollo Microsystems. But yes, let's shift focus and talk about Brigade Enterprises, because we did see an interesting brokerage note that came in by JM Financial, where they've shared a buy call on the counter, citing some strong pre-sales momentum, expanding project pipeline, and improved balance sheet flexibility following the recent fundraise itself. And the brokerage has assigned target price of about 1,020 rupees per share and expects the company to be well positioned to fund its next phase of growth across annuity assets and hotels. Rajesh, for Brigade Enterprises, I mean, the stock did go above that 1,000 this year, but once again, the gains got fizzled out. Can we expect the sideways trend to continue?
So overall, the stock is trading around its long-term support levels, but as of now, it continues to struggle. If we see prices are still below its 20 EMA. So until we don't see a clear breakout from its short-term averages, one should wait. As of now, if we see somewhere around 900, there is some short-term resistance. Once that is crossed, we can expect some momentum towards 980 to 1000 levels. On the lower side, if we see multiple lows are there around 840. So once stock prices crosses 900 levels, 840 can be kept as a stop loss for a immediate upside of 1000 levels.
Okay, all right. That's the view for Brigade Enterprises. We'll watch out how it moves. But yes, apart from Brigade Enterprises, the entire realty basket has seen some good gains over the past two trading sessions, Rajesh. What's your view? I mean, can we see the gains to sustain, or is it just like temporary for the time being?
So realty space has been an underperformer. Even if we see today, from the morning highs, prices are not able to sustain. So as of now, if we see all the key players from the realty space, it's still trading below its 20 EMA. So as of now, we'll still have a cautious view on the space until we see a concrete price and volume breakout. One should avoid this counter. Space.
Okay, all right, to avoid at this point of time for realty. All right, let's move on and talk about Dixon Tech, because the stock has seen a decline of about 3% in today's trading session. And Morgan Stanley did come out with its report where they have maintained an underweighting rating on the counter. Now, what the brokerage has said is that the government has extended the IT hardware import rules, and that usually makes global brands such as Acer, Lenovo, they can continue importing their products. So as a result of which, this reduces the urgency for them to rely heavily on local manufacturing players like Dixon. And Morgan Stanley points out that with this, the Dixon has maintained the long-term guidance of about 48,000 crore rupees from IT hardware till FY 2031. But to achieve this, the company would need to generate about 7,000 to 8,000 crore rupees every year, which they believe is quite difficult to sustain going ahead. So that is why you can see there's some negative sentiment which is playing out on the counter. We can see about 3% decline that is coming in for Dixon Technologies. Rajesh, I mean, the stock is down today, trades below that 13,200 odd levels. It's broken below that 13,000 levels as well. Can we expect more fall ahead?
If we see this stock has been struggling from the September highs of around 18,200, and then it's continuously moving in a lower top, lower bottom, where any bounce is getting sold into. So until we see a structure of higher top, higher bottom, one should avoid this counter. On the downside, if we see somewhere around 12,000, there is some long-term supports. 2 weeks back, there was a rebound from there. So 12,200 would be the crucial levels, support levels going ahead. But for the positive momentum to trigger, prices would need to cross above the 13,700 levels, which is its recent swing high. Once that is crossed, we can expect some momentum. But until that is crossed, one should avoid bottom hunting in this counter.
Okay, one should avoid bottom hunting in Dixon Technologies. Right, let's move on and talk about another stock in focus. That is your KEC International. The stock has jumped over 7% in today's trading session, given that the Delhi High Court has put Power Grid's bidding ban in abeyance itself. That is why you can see that the stock has seen a jump of about 4 to 5% in today's trading session, and it is the highest level that the stock has seen since March 28 itself. KC International, what do you believe, Rajesh? Because the stock, however, has been in consolidation mode.
Yeah, I mean, a strong up move in today's session. In fact, it has rebounded from its long-term support, but still we can see some overhead resistance. If we see during the mid-November, there was a bearish gap, and prices are just retesting those gap levels. Also on the high side, there is key moving averages like 89 EMA. So in the short term, the consolidation may continue. 780 seems to be the resistance, and on the downside 700 seems to be the support. So 800 to 700 is what we are expecting the prices to consolidate further in the near term.
Okay, all right. That's the view for KEC International. Nearly 5% gains that is coming in for the counter. But yes, another stock that has remained in focus today, that is your Ashok Leyland, seeing a gain of about 2% in today's trading session, given that Nomura has turned quite constructive on the counter, and they've cited some clear signs of a strengthening upcycle in the CV industry. Now, the brokerage has maintained its buy rating and raised the target price, implying a potential upside of about 14% from current levels. Rajesh, I mean, the stock has already seen quite a bit of a bull run this year itself. So, what lies ahead for you, and what is the next target level an investor should watch out for?
Yes, definitely the prices have seen vertical move, and the kind of formation we are seeing, we expect the move to extend towards 185 to 190 levels. So yes, bias remains positive. Those who are having it continue to hold on to it. But for fresh buying, since the indicators are in overbought, I would suggest wait for some consolidation or for some kind of dip. If the prices dip back towards 168 levels, that would be ideal. On the high side, we expect possibly the stock can head towards 190 to 200 levels.
Okay, 190 to 200 levels can be the next target for Ashok Leyland. All right, let's move on and talk about one of the top buzzer of today. That's your Jupiter Wagons. The company has done quite well, 20% gains that is coming in for the counter after the company's promoter has bought an additional stake which amounts to about 135 crore rupees. Now, its promoter, that is your Tatravanka, has bought about 27 lakh shares in the company, and it has increased its shareholding in the company from 18% to about 19.2% itself. But yes, so far this year, Rajesh, if you look at the counter, the stock has been an underperformer. So can we expect the trend to reverse? Because not just Jupiter Wagons, but the entire railway basket has been quite buoyant today.
Yes, the entire railway space is in burst today, and the kind of moment we are seeing in today's session, price and volume breakout. Expect this move to continue towards the 200 DMA, somewhere around 340 to 350 levels. So, if in case there is some kind of dip in the coming session back toward its levels of 300, that would be an opportunity for the targets of 340 to 350.
Okay, all right. The last rates just coming on your screen, where Nifty has closed with about 195 points gain. 7/10, nearly a percent gain coming in for the Nifty 50. It's mounted above that 26,160 odd level, so to say, as well. Sensex also closing with a gain of about 600 points and nearly 0.7% gain coming in there as well. Bank Nifty up by about 200 points. Nifty Midcap Index showcasing a gain of about 460 points as well. But yes, the participation definitely came from the broader end of the markets, because if you look at the benchmark, the mid-cap and small-cap indices, definitely both of them have outperformed the benchmark, so to say. Small caps particularly are seeing a good recovery for the third consecutive session with about nearly a percent gain itself. But yes, if you look at from a sectoral front, majority of the sectors have ended in the green, barring the Nifty realty space, which is seeing a bit of a profit booking, ended flat with a negative bias. On the other hand, if you look at Nifty consumer durables, that is also end with a negative bias of about 0.3% decline. On the other hand, from what has done well in this market, that definitely stood out to be your Nifty metal index, showcasing a gain of about 1%, given that the US Federal Reserve official has indicated that more rate cuts could be on the horizon, given that US reported a softer than expected inflation print as well. So yes, Nifty metal index definitely buoyant on the back of that, and as a result of that, we have seen Nifty IT index also showcasing a gain of about 2% itself. On the other hand, if you look at pharma, PSU banks, private banks, all of them have fairly been resilient in this market. Now, what were the top gainers and losers? Let's take a quick check of that. Trent, one of the top Nifty gainers, 4% gains coming in for the counter, second days of consecutive gains. Shriram Finance doing well on the back of the recent proposed stake acquisition in the company with about 3.4% gains. IT stocks, like I was talking about, doing quite well, and as a result of which Wipro and Infosys dominating the Nifty 50 gainers list as of now with about 3% gains. On the other hand, Bharti Airtel also showcasing a gain of about 2%. On the other hand, if you look at the losers front, HDFC Life, Tata Consumer, SBI, Kotak Mahindra Bank, all of them on the losing end as of now. But yes, let's take a quick check of how Indigo has been faring, because today it was expected to enter the BSE 30 stock exchange, that is your Sensex itself. But yes, we did see an interesting report that came in from Motilal Oswal as well, where they have reiterated its buy call on the counter, saying that it will remain the market leader at its current market share over the long term, despite the short-term disruptions that the company has underwent. Today, the stock has ended flat with a negative bias. But yes, Rajesh, the stock has fallen by about 13% so far this month. What's your take?
This is on Hindalco.
This is on Interglobe Aviation.
Yeah, so the stock has been in news, and because of that, it has been under pressure. So for now, we would wait for it to cross about short-term moving averages, that is around 5,200. Once 5,200 is crossed, that is its short-term moving average, and the bearish gap left. And once that is crossed, then we can expect the price to move back towards 5,500 to 5,600 level. So as of now, wait and watch is the approach. On the lower side, if we see from last week, there is some kind of bounce back and a bullish formation on the weekly chart with the 49.80 as an immediate support.
Okay, all right. We've discussed a range of stocks with you, Rajesh, but anything that you want to highlight as your top picks?
Yeah, two counters that are looking very interesting. One is UPL. The stock was trading in a range of around 770 to 730 for last few weeks. But we are seeing a very strong pattern breakout. So UPL can be bought with a stop loss of 752 in the near term, expecting targets of around 810. One more counter which you also highlighted was Bharti Airtel. So Bharti Airtel is continuously moving in a higher top, higher bottom structure. Last week, it exactly took support on the 50 EMA and golden retracement, and we are seeing a range breakout resumption of upside. So Bharti Airtel can be bought with a stop loss of around 2100, expecting a near-term targets of around 20 to 50.
Okay, all right. Those are the stocks that we need to watch out for. But with that, we have to let you go, Rajesh. But thank you so much for your time and joining us. All right, we've seen a steady day for the markets once again, where we have seen broad-based buying across the markets itself, and as a result of which both the headline indices have extended gains to about the second consecutive session. Whether or not this terms as a Santa rally is something we'll watch out throughout the week itself, given that it's a holiday truncated week and thin volumes can be expected as well. But yes, as we head towards the end of the year, investors are taking stock of what has been a very eventful 2025 itself. Because if you look at markets across the world, they have moved in sharp and often unexpected ways, because there have been trade issues, changing global relationships as well. And apart from equities, gold has been quite a standout here. Even for that matter, silver prices have seen quite a bit of a rally. So both the precious metals have been on quite a strong footing, given that investors have banked on the faith of precious metals amid the times of uncertainty. But yes, at the same time, oil prices have seen a sharp fall. Crypto has gone through a rough patch, and now the time has come whether to see whether there is an year-end rally or not. And for our own markets, Nifty has seen a seesaw of 2025 marked by earnings downgrades, foreign investor selling, and weak performance in the small and mid-cap stocks. But slowly we can see that global fund houses are once again looking at India as a relative safe haven, and they have turned optimistic on Indian equities, forecasting some double-digit earnings growth as Nifty recovers slowly itself. But whether or not this takes place is something we'll understand from our next guest of the show. Joining me is Sandeep Agarwal, fund manager of Sovilo Investment Manager. Sandeep, good afternoon. I mean, if you look at the markets, they have been consolidating this year, but we are seeing some reversal in flows, a rebound in rupee too. So do you believe that are things finally aligning for our markets?
Hi, good afternoon, and thanks for having me on the show. So, as you rightly mentioned that, some time back, there was kind of mismatch between the realistic valuation and the earnings, and we have seen 3-4 quarters of flattish to declining earnings growth, and as a consequence of that, most of the smart money moved out, and they have invested in alternate markets like Taiwan, South Korea, and few more. And also there was a massive premium which India was commanding at that time. I think in last 1 year, what has happened, that premium has narrowed down substantially, and also our earning growth cycle is now coming back. We also have good rate cuts which RBI has provided. Some liquidity has also come in, and government on its part has has done a lot of things to give more money in the hands of common people by way of GST rationalization and also income tax. So I think that 1 year which was painful, where numbers were not coming and valuations were high, I think that is behind, and I believe that in next 1-2 months, as earnings starts coming in, you will see substantial interest for Indian equities again. Remember, this is only country probably in the world, a large economy which is investable, where there is very clear view that for next decade there will be good growth because of the demography and because of other factors in play. So I have zero doubt that we will not do well. I am very, very optimistic. We believe that substantial money from here will be made in Indian equities.
Okay, got it. But Sandeep, you did mention that our valuation premium against emerging markets have significantly narrowed, but earnings growth, that remains quite a problem. So how do you see the next few quarters to pan out, and what would you suggest investors to do from a 1 year time horizon?
So, earnings growth obviously takes time to recover. And what we have seen is that after RBI's injection of liquidity and the more than 100 bips of rate cut which has happened, now, things are turning around, and private capitals are also seen coming back in pockets. So in my view, while it is very tough to project exactly when it will come, but in my opinion, you will see start seeing green shoots in this quarter numbers, that is December quarter numbers. Already in September quarter's number, if you see, they were far better than the previous quarter. So I think this quarter even will be a bigger positive surprise, and that will give a clue that things are turning into the right direction. So I'm pretty confident that by the end of December, when December quarter numbers come and commentary comes for the March quarter, we will be in a much better position, and it will give a clear sign that earnings is recovering.
Okay, got it. Sandeep, I was speaking to an expert today morning itself, and they said that Nifty could hit about 30,000 by the end of 2026. What's your take? I mean, is there any target horizon for you?
So we generally don't have any target, but I would not deny from that number. I'm very, very optimistic that number will probably come sometime in September, October. That is the way we look at it, because then you will start discounting the latter year numbers, and at that, if a fair multiple is given, then we can hit 30,000 Nifty in October, sorry, September, October, between October to December next year. That is very much a possibility.
Okay, all right. Sandeep, what about the broad end of the markets? I mean, today we did see some good participation. Past 3 days we have seen some good participation. But what can happen over the next year? I mean, especially from the small caps back pocket, because they have seen quite significant pain.
So, as mentioned that when liquidity was tightening, the biggest pain which came was in the earnings of small cap companies and mid cap companies. Now, with the actions which have been taken by RBI and the government, I think that pain is now behind. And when the earnings come back, they will also come back with a very, very strong bounce back, and you will see substantial money being made in small and mid cap. So, as a house, we are very clear. We don't discriminate between large, mid, and small at all, because we believe what was small day before yesterday was mid yesterday and is large today. We have to find out good quality management, good business model, good moat, good client, and entry barriers and all those things, which are the common thing based on which the company should be valued or business should be valued, and not based on what is the market cap. So if you get these things right, then obviously it gives us an opportunity to compound money very fast. And so hence we are always market cap agnostic, and we never discriminate between market cap. We will buy a large cap also if it gives us outsized returns, and we will buy a small cap also if it gives us outsized return. But yes, in this kind of situation, if you have mid and small cap, even if your companies are doing well, they may get hammered for no reason. So that is a downside risk which is always there. But having said that, we think of a 3 to 5 year horizon. We believe that 6 months, 12 months pain we have to endure, so that we can make bigger returns.
So do you think that next year is also going to be the year for large caps over mid and small caps?
I don't think so, honestly. I think that mid cap and small cap earnings will bounce back very, very strongly, and there will be massive outperformance by mid and small caps in next 1 year.
Okay, massive outperformance expected. But from a sectoral perspective, Sandeep, I mean, consumption growth in India, that has been still lagging the GDP growth. If you look at the FMCG volume growth, that is still at about 4 to 5%. GDP growth has been at about 7 to 8%. So what do you think is leading that, and how does the outlook look like going ahead in 2026?
So we are very negative on the FMCG sector structurally for a long time now. There are two reasons. The population growth rate has fallen by more than half in last 20 years. So, the volume growth which you used to get, that has started coming down. Because of that is also one of the reasons. Second, we believe that, there is only so much you can increase on pricing front, because I think that, inflation structurally will be much lower level than we have seen in the past 2 decades. So if inflation is, let's say, 200 basis point lower than structurally what it was in last 2 decades, then your obviously pricing power cannot be that much. So I think FMCG will become a 5-6% revenue growth story. In one of the 3 years, it could be 10%. And based on that, why should we give 50, 60 or 40 multiple? I don't know. So we never touch any FMCG unless it is a contract manufacturer or someone which is available at a much reasonable price. We generally avoid all the expensive names, because we are very sure that you can't get more than 6-7% growth. So we have to pay multiple accordingly, and we are not big fan of paying 4 or 5 times PEG ratios. We are a value focused fund, so we always buy good quality growth at a reasonable price.
Okay, all right. I mean, Sandeep, today we did see the largest foreign transaction deal in the India's financial space, that is your Shriram Finance. So how do you read through this? Because we have seen some good FII stake buying in Yes Bank as well, Federal Bank as well. So, I mean, this comes when the FI participation in cash markets have been quite low. So, what's your assessment?
No, so I generally don't comment on stock specific things, because we run a PMS and there are disclaimers around. But let me put it this way, that it is a very good, very positive sign. We are seeing consistent inflow of foreign investment in small banks and NBFCs, and two things which happen. One, more better discipline, better regulation, better corporate governance follows, and second, the credit rating goes up and the cost of funds fall. So, it is a very, very big positive for anyone who is getting such big infusion from a foreign partner. So, I think it is going to be very positive, not only for Shriram Finance, but it will be very positive for other companies which are in the space, because it will give a hope that, if they execute well, they manage the corporate governance part well, then, they can also get infusion from foreign partners. So, I think it is a very good thing for the sector to happen.
Okay, okay. But apart from, NBFC, like we discussed, which area is where you find some good growth visibility from here on, and what are you betting on for 2026?
So, we have basically gone wrong in our assessment on manufacturing in last 1 year, because last 1 year have been quite weak on the manufacturing front because of lack of pickup in the private capex, and also not so much support coming in from somewhere else. But we believe that structurally for next 10 years, India will be manufacturing hub. We have to make our manufacturing right to accommodate so much of new workforce which is coming every year, and to also contain the inflation part. So I think government will definitely, push it more going forward. They are doing a lot of things to do that. And I think manufacturing will be biggest value creator in next 10 years in India. And we also like pharma a lot, because pharma, we have a very, very big advantage. We used to like 18 months back tech a lot. Now we don't like tech much, because the biggest market for tech, which is the US market, I think there is a saturation in terms of penetration there. There could be some growth from Europe and Middle East and other markets, but I don't think that will suffice to show a substantial growth for the overall companies which are listed, because the base is very big and the base has a substantial component of US. So we love pharma, we love manufacturing, we love water theme, we love recycling theme, we love some of the banks and some of the NBFCs. So that is the way, and some of the services pieces also, and the platform, we are very fond of platforms. So that is the way we design our portfolio and maintain it.
Okay, okay. Well, Sandeep, what about autos? How is this fitting in the piece of the entire theme that you have laid out?
So generally, we buy when everyone is selling, and auto doesn't fit in that category right now. We bought auto 3 years back. We sold around 12 months back. So we have lost the last 30%, 25% upside. So we feel bad about it, but we are happy that we made 70%, 60% before that. So we used to own a lot of names in auto, but we have broadly got out of the space. We have some of the auto anchors now, where we think that next 6-12 months could be very good.
Okay, okay. Anything that you are cautious at this point of time?
We are very cautious on FMCG. We are very cautious on IT. This too, we are very cautious.
Okay, okay. Got it. All right. All right. Good conversation, Sandeep. But with that, we have to let you go. Thank you so much for joining and connecting with us.
Thank you, and Happy New Year if we don't connect again till that time. Thank you.
Thank you. Thank you. Wish you the best of festivities as well. All right, that's all we have for this edition of Closing Bell. But, it's the second day of consecutive day of gains for the markets. Could be the beginning of the Santa rally or not. That we'll be watching out throughout the week itself. But for now, the market clearly favoring the advances as of now, because the advance decline ratio clearly stood out at about a 5:2. But yes, with that, we've come to an end of this edition of Closing Bell. It's a wrap from me. Thank you for watching, and we'll catch with you tomorrow.